is. It's time for Overlook Stock, so we'll bring in George Tsilis to help us take a look at the one he selected for us today. Of course, SailPoint is your pick on the day, George. They reported a surprise profit, sending shares higher today, higher by almost 15%, in fact. Can you walk us through their earnings?
Yes. If you look at SailPoint, this is an interesting company. I remember this name from the late 2017 or 18 levels. This was a company that was prior publicly traded but went private, and it actually relisted. A lot of people were talking about CoreWeave and some of the other recent IPOs. This IPO'd back in February of this year and relisted as a publicly traded company. So for what it's worth, they're back listed. For those who don't know, the company is essentially a cybersecurity company that focuses on cybersecurity identity access solutions that are unified. That includes on-premise as well as hybrid, but they also provide customized access to employees, non-employees, both on-premise and the cloud, but also provide customized access for machines that use cybersecurity-based technologies that are automated. And so I think this is a very interesting technology and a name that does compete with some of the bigger players in the space like Zscaler, Okta, as well as CrowdStrike and Palo Alto. Now, today's move is actually quite meaningful because if you look at the EPS numbers that were expected to be reported, they were expecting an adjusted loss of about a penny. They actually beat the estimates, coming in with a profit of a penny, so they beat by 2 cents in terms of adjusted earnings. And that's meaningful because anytime a company's near break even, at the very least, on an adjusted basis, if they beat, they typically move the price quite aggressively, which you can see it happened today. But at the same time, if they would have missed, the opposite would have been true. But nonetheless, sales came in quite a bit above estimates at $230 million versus the $225 million, up 23% year over year. But the context of the subscription revenue, irrespective of 25% year over year sales for the last 4 quarters, subscription revenues were higher by 30%, as well as the fact that now about 92% of total sales are based on recurring subscriptions versus non-recurring annual contract renewals. So overall guidance also was raised slightly. If you look at the EPS prior to the print, they were expecting 17 cents at the midpoint, and they actually increased it now to 18 cents, as well as sales higher to 1.10 billion versus 1.03 for the fiscal year 2026.
And I'm noticing now as I'm looking through this, they quite a few price target increases in the aftermath of the earnings. I'm looking at Mizuho raised theirs up $26, kept a neutral rating though, but did describe it as in a class of its own. Do you think that we'll continue to see more from them? Are they in a class of their own, George?
Well, I think so. In case, if you look at the identity access privilege solutions they provide to, like I said, employees and non-employees that need access to their networks or corporate enterprise networks. But I think one of the unique things about the company's technologies is access that they give to privileged machines. In other words, everything from industrial automation and robotics, they can assign or ascribe certain privileges, cybersecurity privileges, to machines, not necessarily personnel only. So I think that's very unique. I think Mizuho is looking at the company as a very unique company and prospectively a growing company, but I think they're also providing a neutral rating because even if you look at the adjusted earnings this year, which changed to 18 cents, slightly higher, and even next year for 25 cents, it's trading around 100 times forward earnings. So they're looking at potentially the valuation being a constraint, the forward earnings multiple being quite rich or high, irrespective of the fact that they may be growing their top line sales and even earnings in the 20 to 30% range.
Well, thank you so much, George, for that.